TSLA stock has experienced a meteoric rise in recent years, capturing the attention of investors and enthusiasts alike. However, the company's growth has slowed recently due to pricing pressure, intensifying competition, and challenging macroeconomic headwinds. This begs the question, is it time to dump the stock, or will Tesla bounce back? To answer that question, let's do a full analysis of Tesla, which includes looking at its business model, financial metrics, valuation, and strategic positioning. So stick around and find out. Tesla was founded in 2003 by Martin Eberhard and Mark Tarpenning. The company's headquarters is located in Austin, Texas. The primary goal of Tesla is to accelerate the world's transition to sustainable energy. They aim to design, develop, manufacture, and sell electric vehicles, battery energy storage products, and solar energy products. Their main products include EV Model S, a high-performance luxury sedan with a range of up to 405 miles and acceleration from 0 to 60 miles per hour in under 4 seconds. Model X, a luxury SUV with falcon wing doors, autopilot capabilities, and a range of up to 358 miles. Model 3, a compact sedan designed to be more affordable than the Model S. It offers a range of up to 272 miles and can charge from 0 to 80% in about 40 minutes. Model Y, a mid-size SUV combining Model 3's efficiency with Model X's versatility. It boasts a range of up to 330 miles and can accommodate 7 passengers. Solar Roof, a product that allows homeowners to generate electricity from their roofs by seamlessly integrating solar cells into the roof's design. Powerwall, a rechargeable lithium-ion battery designed to store electricity generated by solar panels or purchased from the grid, allowing users to store energy for later use. Autopilot, a suite of advanced driver assistance systems that include features such as automatic emergency braking, lane keeping, and adaptive cruise control. It is important to note that Autopilot is not fully autonomous and requires driver supervision. Full Self-Driving FSD, a paid subscription service that provides additional features such as lane changing, auto-stealing, and summoning. FSD is still in beta testing and not yet available to all users. Tesla's revenue streams are diversified across various segments. Automotive accounts for the majority of revenue derived from the sale of its EVs and related services. Energy contributes through solar panels, solar roofs, and energy storage solutions. Software and services generate revenue from FSD subscriptions, servicing, insurance, and supercharger network access. Additionally, Tesla has historically earned revenue from selling carbon credits to other automakers who have not met their own emission targets. In terms of competitive advantages, Tesla enjoys several key strengths. Firstly, its strong brand and customer loyalty. Tesla has cultivated a passionate community of customers who admire its sleek designs, innovative features, and commitment to sustainability. This strong brand image helps Tesla command premium prices and generate repeat business. Secondly, Tesla possesses proprietary technology and intellectual property, particularly in areas such as battery technology, powertrain design, and self-driving software. These technological advantages allow Tesla to differentiate itself from competitors and maintain a leadership position in the EV market. Thirdly, Tesla benefits from a vast and growing charging infrastructure with over 50,000 superchargers globally. This extensive network provides EV owners with convenient and reliable charging options, reducing range anxiety and enhancing the overall ownership experience. Furthermore, Tesla's vertical integration of its supply chain enables greater control over manufacturing processes, cost efficiencies, and product quality. Lastly, its highly efficient gigafactories leverage economies of scale and automation to produce vehicles at competitive costs while maintaining high standards. However, Tesla also faces intense competition in both the EV and broader automotive industries. Established automakers, including GM, Ford, and Volkswagen, are investing heavily in EVs and expanding their electric lineups. Moreover, new EV startups such as Rivian and Lucid are challenging Tesla's market share. Intense competition keeps prices down and forces Tesla to continuously innovate. Additionally, Tesla's heavy reliance on China for manufacturing and supply chains exposes them to geopolitical risks and potential disruptions. Despite these challenges, Tesla remains a dominant force in the EV market, consistently ranking first globally with a 14% market share in 2023. Regarding its future prospects, Tesla continues to invest heavily in research and development, particularly in areas such as battery technology, self-driving capabilities, and artificial intelligence. These investments aim to maintain its technological edge and drive future growth. Tesla's ambitious expansion plans include new vehicle models, increased production capacity, and global market penetration. Notably, Tesla's entry into the more affordable EV segment with the Model 3 and Model Y has the potential to disrupt the mass market. Additionally, Tesla's pursuit of cost reductions through manufacturing efficiencies and supply chain optimization positions them to compete effectively in price-sensitive segments. While economic uncertainty and potential recession pose challenges to consumer spending on discretionary items such as EVs, Tesla's strong brand loyalty and reputation for innovation may cushion against some of these external pressures. Next, let's examine Tesla's financial health using ratio analysis. Liquidity and solvency indicate that Tesla maintains a healthy liquidity position with current assets covering its current liabilities by 1.6 times. Its quick ratio of 1.3 suggests that even in a sudden downturn, the company has enough liquid assets to cover immediate obligations. Tesla's low debt-to-equity ratio of 0.09 highlights its conservative approach to leverage, indicating a strong balance sheet and reduced financial risk. Profitability analysis reveals that Tesla's net profit margin has declined from 15.5% in 2023 to 6.54%, primarily due to lower regulatory credit sales, higher operating expenses, and the impact of price cuts aimed at maintaining vehicle volumes. However, the company's return on equity ROE of 7.84%, although down from previous years, indicates that Tesla is still generating decent profits relative to shareholders' equity. Efficiency ratios show that Tesla's inventory turnover of 7.31 and days sales of inventory of 4.91 suggests an efficient inventory management system, which is crucial for an automobile manufacturer. Valuation metrics reveal that Tesla currently trades at a high 2 earnings PE ratio of 92.46. While this may seem elevated, it's essential to consider the company's high growth rate and technological leadership. However, a price-to-sales PS ratio of 10.68 suggests that investors are willing to pay a premium for Tesla's products and services. Finally, Tesla's dividend yield of 0% is typical for a high-growth tech company that prioritizes reinvesting profits back into the business for expansion and research and development rather than paying dividends to shareholders. So now let's do a valuation of Tesla. Tesla's forward price to earnings PE ratio is approximately 43.7 based on analysts' estimates for the next year's earnings. Considering industry averages and historical multiples, a PE ratio below 20 typically indicates a potential undervaluation, while a PE above 20 might suggest overvaluation. Tesla's current PE of 43.7 clearly indicates that the stock is trading at a premium compared to its historical average PE of 131.7. This premium could be justified by Tesla's strong growth prospects, technological leadership in the EV industry, and its potential to disrupt the broader automotive market. However, investors should also consider the risks and challenges associated with investing in Tesla, such as competition, regulatory changes, and macroeconomic uncertainties. It is essential to conduct thorough research, consider diversification, and consult with a financial advisor to make informed investment decisions. Based on the discounted cash flow DCF analysis, Tesla's fair value ranges from approximately $132.29 to $173.06 per share. This suggests that the current market price of Tesla might be overvalued. However, it's important to recognize that DCF models rely on various assumptions and estimations, including future growth rates, discount rates, and terminal values, which can significantly impact the results. Therefore, investors should interpret these valuations with caution and consider them as one of many factors in their investment decision-making process. Overall, Tesla's performance has been impressive, but its current valuation seems stretched thin, especially considering the upcoming delivery of the Cybertruck and the expected boost in profitability as margins on those vehicles are much higher. But how much longer will it take before Tesla becomes profitable again? You see, when we look at the company's financials, what stands out is the drastic decline in gross margins, which have fallen from a high of 32.90% in the second quarter of 2023 to just 17.90% in the second quarter of 2024. This steep decline is largely due to price cuts and the company's efforts to maintain and increase vehicle volumes despite economic uncertainties. As a result, Tesla's net income has also taken a hit, plummeting from $2.7 billion in 2023 to just $256 million in 2024. The good news, however, is that Tesla has been taking measures to address this issue, such as implementing cost reduction measures, streamlining its operations, and increasing vehicle prices. It remains to be seen whether these actions will be enough to restore profitability and reassure investors about the company's financial health. Some analysts estimate that Tesla will regain profitability in Q4 of 2024, while others are more optimistic, predicting that it could happen as early as Q3 of 2024. But it's important to keep in mind that these are just estimates, and the actual timing of Tesla's return to profitability may vary depending on a variety of factors. If you enjoyed this video, please don't forget to give it a thumbs up. If you haven't already, please subscribe. Your support means everything to me. Thank you so much, and until next time.